There's a yellow slip in your mailbox. Note it is just past noon on a Thursday. The slip says a certified letter is waiting for you at the post office. The sender is listed as the Department of the Treasury, Internal Revenue Service. You drive to the post office. You wait in line. You hand the slip to the clerk and sign for the envelope. You open it in the parking lot. The letter says your tax return has been selected for review under the IRS Automated Underreporter Program. It says the income figure on your return does not match information reported to the IRS by a third party. It says you owe an additional amount plus interest. You filed that return months ago. You used the same preparer you have used for years. You reported everything you received. You are sitting in a parking lot holding a letter that says the IRS disagrees. Your first instinct is to call your preparer. Your second instinct is to pay what they say and make this go away. Your third instinct is to say nothing and hope it resolves itself. All three of those instincts, in this specific situation, are the wrong move if done without understanding what this letter actually is, what triggered it, and what rights you have before you respond. Most people who receive this letter do not know that it is not a final bill. They do not know it is a proposal they can dispute. They do not know that responding the wrong way, or not responding at all, turns a fixable situation into a formal tax debt that follows them for years. What a tax professional charges $275 per hour to explain before you touch this letter is sitting in this video. Stay with me. I am Jacob, and I reviewed the official IRS documentation on the Automated Underreporter Program, the CP2000 notice process, the Taxpayer Bill of Rights, and the specific review triggers that are affecting the most filers in 2026, including immigrants, seniors, gig workers, and anyone who received income through a payment app or a 1099 form. Everything here comes directly from irs.gov and the Internal Revenue Code. Before we go through this, the IRS Automated Underreporter Program runs every year, and it is running at a higher volume in 2026 than in previous years. More income sources are being reported to the IRS than ever before, and the mismatch rate is rising. The IRS does not warn you personally when your return is selected. Subscribe and turn on the notification bell so that updates reach you before they reach your mailbox. And join our WhatsApp community, link in the description, where we share confirmed IRS and benefits updates the moment they are verified. Now let me show you exactly why your return was selected and exactly what your rights are. Here is what is actually confirmed under federal law and IRS policy. The IRS Automated Underreporter Program, called the AUR program, is a computer matching system that runs automatically after every tax filing season. The system compares the income figures you reported on your tax return against income figures that third parties, employers, banks, investment platforms, government agencies, and payment processors reported to the IRS on forms like the W-2, the 1099 NEC, the 1099K, the 1099 INT, and the SSA 1099. When the system finds a discrepancy, even a small one, between what you reported and what a third party reported about you, it generates a proposed adjustment. That proposed adjustment is mailed to you in a notice called the CP2000. The CP2000 is not a bill. It is not a final assessment. It is a proposal under IRS notice procedures, and you have the legal right to agree with it, disagree with it, or partially dispute it. Here is what is being shared in community groups that is not accurate. There are posts saying that if your tax return is selected for an AUR review in 2026, it means the IRS suspects you of tax fraud and your case has been referred to criminal investigation. That is false. The AUR program is a civil income matching process. It is automated and administrative. The vast majority of CP2000 notices are resolved without any criminal referral, without any audit, and without any enforcement action, simply by the taxpayer responding with the correct information or documentation. There are also posts saying that immigrant filers who receive CP2000 notices are automatically reported to immigration enforcement. That is also false. IRS return information is protected under IRC Section 6103, which prohibits the IRS from sharing your tax information with immigration authorities for civil enforcement purposes. Knowing that distinction prevents panic-based decisions that make the situation worse. Now let me walk through exactly why returns are being selected automatically in 2026 and what your rights are at each stage. The first and most common trigger in 2026 is the expanded 1099K reporting requirement for third-party payment platforms. Under the American Rescue Plan Act, payment platforms including PayPal, Venmo, Cash App, Zelle in certain configurations, eBay, Etsy, and Airbnb are now required to issue a 1099K form to any user who received $600 or more in payments through the platform in a calendar year. Before this rule, the threshold was $20,000 in 200 transactions. The threshold dropped to $600, a massive change that affected millions of filers who had no idea they were now receiving a 1099K. If you received payments through any of these platforms in 2024 and you did not report that income on your 2024 tax return, or if you reported it in a way that does not match the 1099-K the platform sent to the IRS, the AUR system will flag a mismatch and generate a CP2000. This affects immigrant workers who use apps to receive payment for services: cleaning, driving, caregiving, food delivery, handyman work. It affects seniors who sell items online. It affects anyone who received family support payments through these apps that the platform categorized as goods and services rather than personal transfers. If the income on your 1099-K was not actually taxable, for example, if it was reimbursement for expenses you paid on behalf of someone else or personal gifts, you have the right to dispute the CP2000 and explain why that amount is not taxable income, but you must respond to do that. The second trigger is unreported or misreported Social Security income. Every year, millions of seniors and immigrant seniors who receive Social Security retirement or disability benefits receive a form called the SSA 1099. This form shows the total Social Security benefits paid to you during the year. Depending on your total income from all sources, a portion of your Social Security benefits, up to 85%, may be taxable under IRC Section 86. Many seniors who have received Social Security for years and filed taxes themselves or with informal help do not include the correct taxable portion of their benefits on their return. The AUR system compares the SSA 1099 figure against what was included in your return and flags any discrepancy. If you received Social Security benefits in 2024 and had other income from work, investments, or pensions, your Social Security may have been partially taxable. And if you did not report that correctly, a CP2000 is the result. The exact words to use when you call the IRS number printed on your CP2000 notice are these: I am calling regarding notice CP2000 for tax year listed on your notice. My taxpayer identification number is your number. I am within the response window and I want to confirm the specific income item and form that generated this notice before I submit my written response. Write down the agent's name, the date, and every detail they give you. Do not say I do not recognize this income, or I think my preparer made a mistake, or I did not know I had to report that. Every word you say on that call is documentable. Keep it short, factual, and specific. Tax professionals charge $250 per hour to prepare clients for exactly this call. You now have the same script. The third trigger is mismatched retirement account distributions. Many immigrants who worked in the United States for years and later retired or left employment have retirement accounts, 401k, IRA, pension plans, that they may begin drawing from after age 59 and a half, or in cases of financial hardship. When you take a distribution from a retirement account, the plan administrator sends a 1099-R to both you and the IRS. If that distribution is not reported on your return, or is reported under the wrong income category or without the correct taxable amount, the AUR system flags it. Early distributions, taken before age 59 and a half, also trigger a 10% additional tax under IRC Section 72T, unless a specific exception applies. If the 1099-R shows a distribution but your return does not reflect the correct tax treatment, a CP2000 will follow. Consider what happens when a senior immigrant does not respond to a CP2000. A 64-year-old permanent resident receives a CP2000 for an IRA distribution she took during a medical emergency. She sets the letter aside because she finds the language confusing and plans to deal with it when she has more time. The 60-day response window closes. The IRS converts the proposed adjustment into a formal assessment under IRC Section 6213. The amount now includes the original proposed tax plus interest that has been accumulating since the original return due date. A tax lien is recorded against her in public records. When she applies to renew her apartment lease the following year, the landlord finds the lien in a background check. That entire chain started with one unanswered letter. That outcome was completely avoidable. The fourth trigger is foreign income and foreign account reporting discrepancies. This trigger specifically affects immigrants who have income sources in their home country: rental income from property, pension payments from a foreign government, interest from a foreign bank account, or payments from family-owned businesses abroad. As a U.S. person for tax purposes, which includes green card holders and resident aliens, you are generally required to report your worldwide income on your U.S. tax return under IRC Section 61. Income earned outside the United States does not automatically exempt you from U.S. reporting requirements. If foreign income appears in IRS information sharing systems through bilateral tax treaties and data exchange agreements that the U.S. has with dozens of countries, and it does not appear on your return, the AUR system or a separate examination unit will flag it. Never assume that income earned in another country is invisible to the IRS. The U.S. has tax information exchange agreements with over 100 countries, and that network has expanded significantly since 2020 under the Foreign Account Tax Compliance Act, known as FATCA. If you have foreign income that you have not been reporting, the voluntary disclosure programs available through the IRS are designed specifically to help taxpayers come into compliance before the IRS finds the discrepancy on its own. Coming forward proactively results in significantly better outcomes than being contacted first. The fifth trigger is gig economy and self-employment income that was received but not reported or underreported. Many immigrants, particularly those working in domestic services, construction, food delivery, childcare, and transportation, receive payment in cash or through apps for work they perform independently. If any payer paid you $600 or more during a calendar year and reported that payment to the IRS on a 1099 NEC, that income figure now exists in IRS records. If your return does not include it, the AUR system will flag the mismatch. Self-employment income is also subject to self-employment tax under IRC Section 1401, a separate tax on top of income tax, and if that tax was not calculated and paid, the CP 2000 may include both the income tax and the self-employment tax owed. Here is your exact step-by-step plan when you receive a CP 2000 or any IRS income review notice. Step 1. The day the notice arrives, find the response deadline printed at the top of the first page. Count 60 days from that date. Mark it on your calendar. Set a reminder 2 weeks before that date. Step 2. Read the Proposed Changes section of the notice. It will identify the specific payer, the specific form type, 1099-K, W-2, SSA 1099, 1099-R, and the specific amount the IRS received from that source versus what you reported. Step 3. Compare that figure against your own copy of your tax return and your own financial records. Did you receive that income? Did you report it? Was it reported under a different line or category? Was it not taxable income? Step 4. Call the IRS at the number on your notice and say exactly this. I am calling regarding notice CP 2000 for tax year listed on your notice. My taxpayer identification number is your number. I am within the response window and I want to confirm the specific income item and form that generated this notice before I submit my written response. Step 5. Write your response before the deadline. If you agree with the proposed change, say so and include payment or an installment agreement request using Form 9465. If you disagree, state your specific reason in plain language, attach supporting documents, and mail the response certified with return receipt to the address on your notice. Step 6. If the proposed amount creates a genuine financial hardship, contact the Taxpayer Advocate Service at 1-877-777-4778 and say, I received a CP 2000 notice and the proposed amount is creating a significant financial hardship. I am requesting taxpayer advocate assistance. Here are the free resources that support everything in this video. IRS CP 2000 information and your rights, IRS Gov CP 2000, IRS Mainline 1-800-829-1040. Taxpayer Advocate Service, taxpayeradvocate.irs.gov or 1-877-777-4778. Free tax help for seniors and low-income filers. VITA program, IRS Gov VITA. IRS Installment Agreement Application, IRS Gov OPA. For help understanding foreign income reporting, IRS Gov, Businesses, Corporations, Foreign Account Tax Compliance Act, FATCA. Free Immigration and Benefits Legal Aid, immigrationadvocates.org. One important warning before I close. There are people calling and texting immigrants and seniors right now claiming to be IRS agents and saying that a return review has resulted in an immediate balance due that must be paid today to avoid arrest or deportation. The IRS does not call you without first mailing a notice. The IRS does not threaten deportation. The IRS does not demand payment by gift card, cryptocurrency, or wire transfer. Every legitimate IRS contact about a return review begins with a mailed letter, a CP 2000 or similar notice, not a phone call. If you receive a call like this, hang up and report it at reportfraud.ftc.gov. There are also paid tax resolution companies that charge large upfront retainer fees to handle a CP 2000 response that you can file yourself for free using the steps I just gave you, or with free help from the VITA program or the Taxpayer Advocate Service. Now I want to hear from you. Have you ever received a CP 2000 or any notice from the IRS saying your return does not match their records? Did you know you had the right to dispute it? Drop your question in the comments below. And tell me, which country are you originally from and which state are you watching from right now? Your question may become the next video on this channel. I am Jacob. You have rights in this country. Knowing them is not defiance. It is protection. Take care of yourself.